Happy Friday, you melonheads. It is time to close out this week. Good riddance to this week. Oh my goodness. Starting with Monday with that nonsense, that 1,000 points up, or 1,000 points down, 1,000 points back up. Holy volatility, Batman. I will not be missing this week. My goodness. I hope you guys are doing good. I am doing great. Thank you very much. We've got a snowy day out here in Pennsylvania, which out where I'm at, I'm kind of on the edge of nowhere in Pennsylvania. Rural PA, an inch of snow shuts it all down. It shuts it all down out here, folks. The roads are doo-doo in rural PA. I remember the first time I was in a snowstorm out here. My wife and I were just driving to pick up our girls at school, and there was like 2 inches of snow on the ground, and it took us a half hour to get like 5 miles. And I remember we finally saw a snowplow coming down the street, and we're like, oh, thank goodness, the county is finally plowing the road. And then we realized there's like no flashing lights on the plow, there's no county emblems, and it wasn't the county, it was just a guy who owns a snowplow who decided to go plow a state highway because nobody else was doing it. So everything out here just grinds to a halt when we get the tiniest little bit of snow. So we're going to be spending a lot of time indoors over the next few days, which is great. I like it here anyway. I'm a bit of a homebody. I see a lot of familiar faces in the chat right now. Hello, everybody. Mike Robin, Ralph Potts, Sean Mattingly, Vacation Time 247. Hello. Hello, hello. That's a new face. I see a lot of new guys at in the channel this year or this week. Had a lot of new subscribers join. So if this is your first time with us, thank you very much and welcome to the channel. We hope you will stay a little while. And we are going to shrink my big fat melon of a head real quick here. And let's just run through the week. Look at some of the indices as we head into the last few minutes of trading here. The S&P up almost 50 points. So let's refresh this and make sure that's current data. Yeah, we're up just under 50 points. Just under 1%. Actually managed to eke out a pretty decent week. Up, about 40, 50 points for the week. The Dow fared a little bit better. Dow's up about 200 points for the week, up about 0.5% right now. The NASDAQ, as usual, underperforming the other indexes, although right now, today, the NASDAQ is having a better day, up 200 points. My guess is that has a lot to do with those Apple earnings, which don't you fall for those Apple earnings. Now, I guess I got to CYMA here, folks. You know the drill. This is not financial advice. I am not a financial advisor. This is just financial edutainment. You do your own research, your own DD, arrive at a decision that's right for you based on your unique situation. But with everything going on in China right now, with the Chinese real estate market on the verge of collapse and the phenomenon known as the wealth effect, the Chinese consumer is not going to be spending money on iPhones the way he did last quarter for much longer. So I would not have a lot of confidence in the staying power of those Apple earnings that we saw today. I see Mr. Cheeseburger right here. Do you follow the MMRI, the Mannarino Market Risk Indicator? I'm not familiar. Cheeseburger, first of all, thank you very much, sir, for the super chat, for supporting the channel. I appreciate that, brother. I do follow Mannarino, but I'm not familiar with the MMRI. I guess I need to pay closer attention to Mannarino's channel, but I really like that channel. I have a lot in common with Mr. Mannarino, and I like his demeanor. I like his no punches pulled mentality. So if you're not familiar with the Mannarino channel, by all means, check that one out. Cheeseburger, once again, sir, thank you very much for the super chat. A couple of other things going on in the market today. Silver, my favorite of the shiny metals, not having such a good day. Down another 1.6%. Now, I drew a couple of lines on my silver chart here. Let's make sure you guys can see, and you can. And I just want to zoom in a little bit here for you. So this is going back to August. Now, right back here, I apologize, folks. This is when I put a jinx on the run silver was having. I don't know if you remember. It was last week, about midweek. I did an article or a video, and I was saying I wanted to see silver make a sustained break above its 200-day moving average. I wanted to see a successful retest and a move higher before I got involved in any silver derivatives trading. And as you can see, we just broke above that 200-day moving average, but we came right back down under it. did not sustain, and now we've moved lower. We've broken down below our 50-day moving average. So, folks, I am not going to be doing any silver trading anytime soon. I know some of you folks probably don't want to hear that. But look, we got a gift from the Federal Reserve. We've got rising interest rates on the horizon. And typically, precious metals underperform during periods of rising interest rates. So the Fed is giving us a discount on our favorite of the shinies. And look, we all know what is coming on the horizon. We all know this tightening that the Fed is doing is going to cause big buku problems for markets. And the markets are going to crash, and we are going to be able to capitalize on a lifetime buying opportunity in precious metals, because the ensuing inflation when the Fed reverses course is going to be life-changing money for precious metal investors. So, folks, don't let this short-term stuff discourage you. That is my only, we'll call that psychological advice. It's not financial advice. Don't get too wrapped up in the day-to-day price swings. Although, if you're into the TA kind of thing, I drew a couple of lines here, just my thoughts on where support might be found. And my first one right here is right around 22.15. That's where we bounced today. And if you'll see, we bounced there back earlier this month. So that's one level. We've already found some support there. We'll see if that one holds. The next level below that, I figured that puts us somewhere down here around 21.50. And we've bounced here in the past also. And that one goes all the way back to a few. Oh, I just messed with it. I moved it. Yep, me and my big mouth. Let's go back to 21.50. Where were you? It's about there. Anyways, that line takes us all the way back here. So I saw some support at that level also. And if we fail below 21.50, folks, look out below. The next level of support, in my opinion, is somewhere here around 18.50. So, again, the Fed, the rising rate environment, we're probably going to be getting discounts on precious metals in the future. Don't get too wrapped up in those day-to-day price swings. Again, when you zoom out on this chart and when you consider what is on the horizon with this Fed tightening and the effect it's going to have on our debt-addicted markets, I wouldn't be too worried about 20, 30-cent swings in precious metals. In the long run, I think that's not even going to register on the chart. Another thing I saw, and somebody was mentioning this, I think it was Devin Bryans was mentioning it in the chat before we got started, that oil was looking a little toppy here. Devin, I do somewhat agree with you that oil is looking a little toppy. This is going back to October in oil. Here is that big Black Friday sell-off on the new Scarian. I'm sure you guys all remember that. And then here is November 30th, when I told you guys I was trying to catch a falling knife, that I had made my oil investment. I bought call options in XLE. I bought them on November 30th, and talk about calling a bottom, man. Nailed it on that call. I don't often get them right. I don't often get them that right. But when I do, I gloat about it. I nailed that one. And I've been selling those on my way up. I actually sold the last of my March XLE call options this week. I am now out of those, but I have taken, first of all, I caught a triple on that trade. So I took out my cost basis, and I took out double my cost basis. I put that into my cash reserves that I'm going to have on the sidelines for when this market sell-off hits. And then that remaining third, I have rolled those into new calls up and out, and I bought those going out until May, and I forget the strike that I bought them at, but I have doubled. I guess I shouldn't say doubled down. I took out 2/3 of my investment and took another third and doubled down on it. So right now we're kind of at this double top in crude oil here. It's struggling at this level. So if we break down from here, I'd say, we're probably heading back down lower, maybe even to the low 80s, possibly even the 70s. But if we break above this line, then we're heading into the 90s. And folks, a lot of that is going to depend on this geopolitical situation going on in Eastern Europe. Again, it's not something that's in our control. It's unfortunate. Let's hope cooler heads prevail. Let's hope our leaders get their act together. But I'm not going to be holding my breath on that one. Let's just put it that way. All right, I see we've got more people in the chat. We've got Dumb Money Media, sir. Thank you again for your continued support of the channel. And yes, I know I owe you some information, or I need to get in touch with you about that thing we've been talking about. Hit me up sometime today or this weekend. I have some ideas brewing the mind chamber of lost souls. That does sound ominous. Also starting a new segment, Economic Angst. Economic angst. I like that. There's certainly going to be no shortage of economic angst and anxiety in the near future. I will hit you up, Your Majesty, the King of Money. And again, thank you for your support of the channel, and thank you for the research and the ideas you have been giving me. A lot of you guys send me links and send me information on Twitter. I don't always reply because I get so many of these every day. I try to reply to as many of them as I can. But thank you so much, guys, for everybody who sends me tips and links and information and ideas. You are making the channel better for everyone. So I really do love that information. And again, please don't take it to heart. If I don't reply to all the messages, that doesn't mean I'm not seeing them. It doesn't mean I don't appreciate them. There are just only so many hours in the day. You'd be amazed how much time this takes to do all the research, to film videos, to edit, to make thumbnails. And then, oh my goodness, it is outrageously time consuming, but I love doing this, so I am going to keep at it, hopefully forever. And once again, Dumb Money Media, thank you for the super chat, for supporting the channel. And I also see Cheeseburger again. Thank you, Cheeseburger, for supporting the channel again. He says, it's on his website, traderschoice.net. It seems to follow the debt market. Any adjustment in the debt market has an effect in other markets. Okay, I am writing that one down, Cheese. traderschoice.net. And that is the MMRI, the Manarino indicator. I'm going to check that one out. Thank you, Cheeseburger, both for the super chats and for the information. Any adjustment to the debt market has an effect in the other markets. Absolutely. I mean, the debt market, folks, the bond market, it starts in the bond market, it ends in the bond market. And when I say debt market and bond market, I'm using those interchangeably. I know there's other debt markets, but that's the big one. Everybody likes to watch the stock market. Everybody pays attention to the stock market. Folks, the bond market is where things break. That's where the trouble starts. That's the early indicators. So if you're not familiar with bond market mechanics, or if you're interested in learning more, it's boring reads. But folks, that's how you get better at this stuff, is you got to learn to watch the bond market. They don't talk about it a lot on CNBC. Jim Cramer doesn't do his booyahs and go off on his soundboard about bonds. But that's where the indicators are. That's how you catch this stuff before it breaks. Anyways, I see a lot more going on in the chats here. Okay, let's see the next one. I got a lot of comments from folks here in my post. First of all, I had Cole Marsh saying, how much wood could a woodchuck chuck? Woodchuck could chuck wood, asking for a friend. I don't know. It depends on the strength of the woodchuck and has he been pumping iron or not. But then he went on with his question and said, has the Fed positioned itself to ban crypto at its will and whim? No, I don't think the Fed has positioned itself to ban crypto, but I believe it's the Treasury Department that's going to be going after crypto. I saw in the news yesterday that the president is getting ready to issue some kind of an executive order that grants authority to the Department of the Treasury to regulate crypto exchanges. I don't know who gave them the authority to do that. My guess is that one is going to end up in court. But of course they want to ban crypto exchanges because they ruined their money. They ripped us all off with their inflation. They caused a million problems. And people said, I don't want to play with this garbage anymore. And they went and they made their own money. And they cut the government out of the equation. And now the government wants back in. Well, you can't have it, government. So I'm sure that is going to come up in court. My guess is somebody will sue and say the Treasury and the executive branch does not have the authority to do that without an act of Congress. And Congress doesn't really do anything other than give themselves a raise. So that would slow things down. Good question, though, Cole. Ralph Potts says, what are your thoughts on bond vigilantes in the current bond markets? What's going on in the reverse repo and repo markets? Have you noticed any other changes on the Fed's balance sheet regarding the taper? All right, Ralph. So bond vigilantes are basically people who supposedly object to monetary policy and therefore sell bonds in order to drive the prices down and the rates higher as a means of protest against monetary policy. I'm not so sure that's what's going on, as much as people are just not interested in holding these bonds because they don't keep up with inflation. They have negative real yields. So I don't think it's really like a vigilante act to sell a bond at this level. When you have 7% inflation and a bond is yielding 1.8%, you're losing a lot of money. I wouldn't want to hold that. So it doesn't really surprise me to see that. Reverse repos. I brought up the chart on reverse repos. Let's make sure you guys can see, and you can. We're currently sitting at about 1.6 trillion in reverse repos. Now, I would have expected this to go down a little faster when they raised the debt ceiling. But the thing is, the Build Back Better, the big spending plan, didn't get through Congress, and so we didn't have all this new Treasury issuance that I was expecting. I thought we were going to have an awful lot of bonds hitting the market at the same time, and that was basically going to suck up all of this excess liquidity all at once. Well, that bill never got passed. The other one did. That was like $1 trillion, but that's spread out over several years. So there hasn't been as much new Treasury debt issuance as I was expecting, and so this is not coming down as fast as I would expect. But I'll also say, as the Fed tightens, you're going to see this extra liquidity start to dry up, and you're going to slowly see this head back down to zero because there just won't be any extra liquidity, especially with what the Fed was talking about with the accelerated rolling off of the balance sheet, which I just don't think that's really going to happen. I think they're going to break something before we get to that level. But that was an excellent question. That was Ralph Potts. Thank you. And also, since you asked on the Federal Reserve balance sheet, I just want to point to this chart here, and they just posted some updated data. The Fed balance sheet currently sits at 8.860 trillion, and that is up from 8.757 trillion at the end of December. So, folks, they bought $103 billion worth of assets this month. They were only supposed to buy $90 billion in assets. So, for the month of January, now January's not over, there's still a few days left, but they bought more assets than they were supposed to. So their accelerated taper, they are behind the curve on that right now. I'm not going to say that they're not tapering, because they are tapering. They are slowing it down, but they haven't slowed it down as much as they claimed they were going to. Again, the month of January is not over, but they would have to let $13 billion roll off the balance sheet in the next 5 days. The 5 days? No, the next 3 days in order to meet that number. So you tell me, are they tapering as much as they say? They say they're going to be done by March. Let's see. That's a lot of tapering they have to do in 2 months. Cheeseburger, again with the super chats. Thank you, sir, very much. I appreciate all the support. I'd like to know if you think the MMRI is a useful tool once you looked at it. Do you think bans on crypto in the U.S. will create social unrest? Okay, I will definitely look into the MMRI, and we'll see if it's good. I'll do a video on it, to be honest with you. I have not seen the indicator. So, again, thank you for the support and for the super chat. Now, he says, do you think a ban on crypto will create social unrest? Well, it's not going to make people happy, I can tell you that. But the people it's going to create, we'll say, financial angst with, or was it economic angst? What was it, King of Money? Economic angst. The people who get economic angst from a ban on crypto tend to be libertarian types like yours truly. And those are people who are pretty socially unrestful anyway. Not that libertarians are like particularly hostile. They're actually some of the more minding of their own business types. But they're people who aren't happy with the government anyway. So would a ban on crypto create social unrest? Probably not. Not like rioting in the streets. You might have protests. But that's not to say there won't be social unrest. I think social unrest will probably be one of the defining attributes of 2022 and 2023, to be honest with you. With the rate of inflation, with the energy inflation, and the food inflation, that's the big one. I think social unrest is going to be a very big deal in the not-too-distant future. So, thank you, Cheeseburger, again, for all the super chats and for all the support of the channel. I really appreciate it, brother. And I see Mike Robin from Robin RC Models also in the super chats. Thank you, sir, for your support. He says, Jack, can you check on the Fed's overseas repo, FIMA? FEMA. Seems to me the Fed stops buying U.S. local debt, but will on their overseas repo outlet. Mike, you got me. You got me. I got to do some homework on that one, brother. I'm not going to comment on that because I'm out of my depth here. I just don't know much about it. So I can't comment on that one. So now I have, I got 2 homework assignments from Mike Robin and one from Cheeseburger. I got to write all this stuff down to go and check out the Overseas Repo FEMA, FIMA. Mike, I'm just not familiar with that. But thank you again for your super chat and for supporting the channel. And thank you for all the links you send me on Twitter and the email messages, sir. I really appreciate those. All right, now there was another question I wanted to get to. There was a few of them. Here is Mr. Beachboy, who says an update from Dr. Metzler, and he posted a link to Reddit. Now, Beachboy, I have to say, if you're out there, I'm not sure if you're watching, Beach, normally I would not have covered this one because I'm starting to have my doubts about the good Dr. Metzler. All right, but since you are Beachboy and you are an awesome melon head who frequents the channel, I went and I looked anyway, and I saw this on Reddit from Dr. Marco Metzler, and he says, no invitation to yesterday's fake conference call with offshore bondholders. Now, this is in reference to Evergrand, who supposedly yesterday had a conference call with all of these offshore bondholders who have been threatening to sue the company. I'm not sure if you guys saw my video that I did about Evergrand and them asking for more time from these offshore bondholders, and what a joke that was, because number one, we all know Evergrand has no intention, zero intention of paying back the foreign creditors. All right, they're going to bail out Chinese citizens and Chinese banks. Anybody from overseas who's holding this toxic hot garbage is going to lose it all. All right, but what China really doesn't want, and China has now nationalized Evergrand. All right, this risk management committee that's taken over as the board of this company, 6 out of 9 of them are government officials. So the Communist Party has taken over Evergrand at this point. And they said, we need more time to explore the possibilities and restructuring of the debt. What they're really saying is, pretty please, with the cherry on top, don't sue us right before the Winter Olympics, because it would sure embarrass us if we caused a global financial crisis and a banking collapse right as all of the world press showed up in Beijing for the Olympics. And, you know, the Chinese Communist Party people, they're not too good at asking tough or at answering tough questions from the press, because they have this iron grip on their own press who only ask questions that have been pre-screened and approved by the Chinese Communist Party. So when Western press starts flooding into the country for the Olympics, they don't want to have to answer inconvenient questions about why did you set the global economy on fire? And my theory is that if those lawsuits were to be initiated in court and promptly struck down, that all of these banks and all these hedge funds would have to finally write down all of this junk that's on their books, which so far they haven't. Some of the stuff is still rated investment grade. I don't know how. Not the Evergrande stuff isn't, but Moody's still hasn't downgraded Evergrande. So I think they're just vying for time. So that's the conference call that Dr. Metzler is talking about here. And he says, we are holding, and he lists this bond that they're holding, yet we haven't received anything nor a response to request for the ability to dial in. Nothing on the Evergrande's investor relations page, RE the call. All right, so all that being said about Evergrande and about how it's a joke that they're not going to pay back their investor relations or their foreign investors, I have not been covering the good Dr. Metzler on this channel for a while now, because I am sick of hearing promises about how close he was to filing his lawsuit in the Cayman Islands, and the photo op that him and his buddy took standing in front of the court in the Cayman Islands and posted on his LinkedIn. That was like 2 months ago. 2.5 months ago, he said that they were like 2 days away from filing their lawsuit. And then a week and a half went by, and they said, well, we're just having this issue finding a liquidator, and it's going to be a couple more days. And then a couple of more days went by, and you heard nothing. And then another week went by, and then finally he said, we're waiting for other people to join our suit so we don't have to eat all the filing fees ourselves. And now here we are. It's almost February. He still hasn't filed his suit that he told us 2.5 months ago was 2 or 3 days away. So I haven't been paying a lot of attention to Dr. Metzler because he was losing credibility in my book. Again, this is just my opinion here. I was sick of waiting. He made many promises that he did not follow up on, and so I stopped covering it. That's what it came down to. But I decided to go ahead and read that one and put it up on the screen because that one came from Mr. Beachboy, who is an awesome melon head and has been a big supporter of the channel. So, Beachboy, thank you for your support of the channel over the months, and thank you for sending in your question. Okay. There was a couple here. I will come back to some of these. We talked about Evergrand nationalizing. KS says, what are your thoughts on the real estate market? If the Fed is trying to deflate stocks, will it try to deflate real estate too? Do you think the Fed will raise rates? Do you think in case of a crash, the Fed will jump on cue again if inflation is persistent? Will we have inflationary or deflationary recession? There's a lot of questions here, KS. My goodness. Or paper recession lasting. Okay, we're going to break this one down to one little piece at a time. Are they going to deflate the real estate market too? Yes, absolutely, unequivocally. And they're probably going to cause more problems in the real estate market. Now, they mentioned during Powell's press conference the other day, Powell mentioned that they are going to accelerate the rolling off of the balance sheet. And he also said they were going to get back to the point where the Federal Reserve is holding predominantly U.S. Treasuries on the balance sheet. Now, the reason I mentioned that is because if you look here at the Fed's balance sheet, let's zoom in a little bit, you can see here mortgage-backed securities, they're holding $2.683 trillion of mortgage bonds on their books right now. And Powell told us during this last meeting that they were going to basically return to normal very quickly, where they were going to have only U.S. Treasuries on the balance sheet. That means the Fed is looking in short order to unwind almost $2.7 trillion in mortgage bonds. And bonds, prices, and yields, folks, what happens when you sell $2.7 trillion worth of mortgage bonds? Well, you are going to drop the value of those bonds considerably, and that is going to crank up the interest rates that those bonds are paying. So higher rates, that means higher mortgage rates. So the Fed, if they unwind their $2.7 trillion in MBSs, number one, if they're not careful, they're going to cause a liquidity crisis because nobody's going to want to be holding these MBSs on their books. And one of the things that caused the global financial crisis was none of the banks would lend to each other because nobody wanted to be caught with those mortgage-backed securities on their books. So if the Fed sells these things too fast and they crash the prices, you could end up with another collateral problem with the interbank lending drying up. So that's one thing. But the other thing is this is going to drive mortgage rates a lot higher. Forget just the rate hikes. Dumping $2.7 trillion in MBSs on the market, that's going to send mortgage rates a lot higher. So yes, the Fed, unequivocally, they're going to cause some serious havoc in the real estate market. You can't prop up the housing market and create a bubble and then take away the punch bowl and expect no problems to develop. So that was a good question. Who did that come from? That came from, bear with me, folks. That came from KS. That was his multi-part question. Now I see in the super chat for Mr. Steve Woitis, sir, thank you for the super chat for supporting the channel. What are the odds of the Fed changing policy if things are going south prior to the November 2022 midterms? Prior to November, that's a solid question, Steve, okay? Because the Federal Reserve is becoming an increasingly political organization. And, you know, what they're doing right now is they are caving into political pressure. Right now, the prevailing winds in the political environment is that inflation is bad for politics, right? Remember the president's hot mic incident earlier this week talking about inflation as an asset sarcastically. I do think it was sarcastically. Obviously, inflation is a liability in the midterms. So he is under a lot of pressure to get inflation under control. And the president is putting that pressure on Powell now. All right, so they expect Powell to fight inflation. Now, here's my guess at how that plays out. They will fight inflation, and they will cause problems fighting the inflation. They will crash markets. Is that market crash going to happen before the November midterms? If you ask me, I would say probably. But it's right on the fence because I'm thinking June, and I tend to be early. Okay? So if I think June, and June is too early, that puts... It could happen right around those November midterms, okay? And if it happens right before those midterms, then the president and those in power are going to be putting a lot of pressure on the Fed to ease up. Please don't crash the economy right before an election. And is that going to cause the Fed to change tune? I don't know. I mean, my personal opinion, I think the Fed is going to keep fighting inflation until things get so bad that everyone is begging them to stop. Why is the Fed going to hyperinflate the dollar away? Because we asked them to. I think that's what's going to happen. Will it happen before November? That's a tough call. I just can't nail it down that closely. I just can't do that. Sorry, Steve, but thank you very much for the support of the channel. But yes, they will eventually flip, and they will go dovish again, and they'll do it because of the public demanding them to do it. And that's when we go from big deflationary crash to hyperinflation. And that's why I think if you can time it right, I think with what's going to happen in markets in the next year or so, maybe year and a half, I don't know, you're going to see markets are going to crash big time because of this fighting of inflation and this policy tightening. It's going to create mayhem in markets. And eventually the Fed is going to acquiesce. They're going to flip. They're going to turn the printer back on, and they're going to lower rates again. And those markets are going to come flying back up, and the inflation is going to absolutely explode higher, and that's when the dollar dies. All right, so that, position yourself accordingly. Again, not financial advice, not a financial advisor, but that's where I see things going. And again, I can't tell you exactly when, but you guys have seen that chart. Should we bring that chart of the 10-year up? Are you guys sick of that chart yet? If you've been on this channel for a while, you know the chart I'm talking about, but we're going to bring it up again, folks. Everybody needs to be aware of this. 1 month candles. This is the U.S. 10-year Treasury going all the way back to the 1970s, right? This big spike up here, this is the last time we fought inflation. Let's get rid of some of these things here. The last time we fought inflation, we were all the way up here, almost 16% on the 10-year, all right? And then ever since then, we've had this declining trend of interest rates for over 40 years. And every time we cross above this line, 1987, Black Monday, single largest one-day decline in stock market history. 1994, the bond market crash. 2000, the dot-com bubble. 2008, 2007, the global financial crisis. 2018, the Powell pivot, followed by repo madness, followed by the unfortunate health situation. And now we're heading right back towards that line, folks. And you heard Powell on Wednesday. He's talking about tightening and raising rates and rolling things off the balance sheet. All of that is going to push this interest rate higher above this purple line. Right now, if my trend is correct, at 2.2% on the 10-year, actually just below 2.2%, something in the economy breaks. I don't know what. Don't know if it's going to be a hedge fund. I don't know if it's going to be the MOAS, the AMC GME thing. I don't know if it's going to be Evergrand. I don't know if it's going to be a real estate crisis or a corporate mortgage-backed securities crisis. Commercial mortgage-backed securities, sorry. Something's going to break. And it's going to break right as we touch or break above that line. All right, so that's the chart you got to watch, folks. And right now, that to me, 2.2% on the U.S. 10-year. We're going to have Brian Zarb on the channel another day next week, and he's preparing a couple of charts for us. We've had Brian on the channel before, and he is a sharp, sharp dude. He is the magnificent Maltese melonhead, and he draws his line a little lower than me. I say 2.2. He says lower than that. So we're going to hear from Brian in a couple of days. Look for that one on our channel. But this is the one you got to watch out, folks. It's those interest rates. When you have an economy that is addicted to debt, you got to be careful of those interest rates. All right, so we are at 3:49 right now. We have got 11 minutes left in the trading week. Let's see what markets are doing now. Are we still? Come on, Yahoo. Oh, we are trading up now. Look at the Dow rallying in the close. 34,600. We're up 440 points on the Dow. What happened, folks? What happened while I was talking? What did I miss? Me and my big mouth. My goodness. S&P's now up almost 90 points, 85. NASDAQ up 2.5%. Something's going on here. Was it all that Apple earnings? I don't know, but wow. What do you guys think is going on? Somebody post that in the chat. What's going on in markets? Did I miss something? Oil is losing a lot of its gains that it made today, heading lower. Silver not having a good day. 10-year bond ticked down a little bit, but still 1.78. All right, we're going to keep an eye on that. Something's going on. Big green candles. I guess we're going to rally into the close today. Last 10 minutes of trading going on now. All right. Now, while we're on the subject, there's one other thing I wanted to talk about. I saw this story came across today. I just realized I didn't have my my chart up. I'm sorry. Geez, did I miss that? Did I have my face there for the whole 10-year chart discussion? Rookie mistake. Anyways, I saw this story today, and this really grinds my gears to see this. Wall Street briefed by Biden team on possible Russia sanctions. Citi, B of A, JP Morgan among firms involved in discussions. U.S. and allies hoping to prevent Russian invasion of the Ukraine. This came out today around 10 o'clock a.m. The Biden administration held discussions with the country's largest banks on possible sanctions against Russia as part of its efforts to ensure such actions won't disrupt the global financial system. And folks, I have to ask, why? Why do the banks get advance notice of what the government plans to do if Russia invades? Why do the banks get to front-run retail traders? Why do they get insider information that they are certainly going to go right back to their trading desks with? Why are they given access to that information before the public is? 100% unadulterated horse manure right here, this story. This pisses me off. Were those discussions held in public with cameras and recorders in the room so everybody could hear the same things? No. The banks were given an advantage over retail traders. This made me angry. And they wonder why people say the markets are rigged. Could it be because markets are rigged? That's why. Anyways, this one really grinds my gears. My buddy sent me this on Twitter, and I threw stuff up in the air. I was MFing up and down, all that stuff you can't say on YouTube. I was livid when I read this story. This one really got me. Mark Schwartz, stump grinding, sir. Thank you very much for your continued support of the channel. I will match up to a total of 50 on Super Chats today. Mark, that is very generous of you. Thank you, sir. Appreciate that. And congratulations, by the way. I remember you told me on Monday that you had bought more calls in ticker LNG, Cheniere Energy, when I was saying that I hadn't made any trades yet this week. And real quick, Mark, let's look at that Cheniere chart because, sir, I think you did all right on that trade. Congratulations on doing what I could not. Let's put this on one-day candles. And you were saying that on Monday you added more. What was Monday the 24th? Monday was the 24th. Mark, you did all right for yourself this week, didn't you? Well, sir, congratulations on those returns. I'm sure you are doing very well on your Cheniere trade now. My Cheniere is doing all right. Not doing as well as Mark Schwartz stump grinding is doing, but it's doing pretty well. This one, we definitely rejected those lower levels earlier this week. This is heading higher, folks. I think Cheniere Energy, again, not a financial advisor, not financial advice. This is a company, they liquefy natural gas here in the States. They buy it at Henry Hub for, about $42 or $4.50 per million BTUs, or maybe $5. They liquefy it, they ship it overseas to Europe, and they sell it for about $29 per million BTUs into European markets. And this is one that has just been a cash machine for these last month and a half. I think they're going to blow away their next earnings call, and God forbid things do light up in Europe, in Eastern Europe. This is going to be Europe's lifeline, folks. If things light off in Eastern Europe, this is going to be the only way to keep their power on. So this is a good trade. Mark Schwartz, thank you very much, sir, for the super chat, for the offer, and again, congratulations on those returns, sir. All right, let's see what else we have going on here. Real quick, I just want to mention this one. I had a lot of you guys have asked me about this, so I'm only going to talk about it real briefly. I have created a Patreon page. All right, I have a link in the descriptions of all my videos right now. I just started that earlier this week. I haven't mentioned it yet. This is the first time I've mentioned it. I will be doing a little bit of additional content over there. It's going to be maybe a little bit more personal, a little more behind the scenes. And what I'm going to do with the Patreon page for members over there is when I have ideas that are bouncing around in my head that are not fully developed yet, that I haven't quite finished researching, and I haven't gone through the production of a video and everything, every now and then I'll be posting those ideas on the Patreon and bouncing it off of you guys. And again, there'll be a little bit more behind the scenes, a little bit more of a personal take there as a way of saying thank you. Not going to spend too much time on this, but a lot of you guys asked for that, so I have put that up there. And again, there is a link in the description to that. All right, let's go back. We're going to close that one up. We already talked about the reverse repos, and there's a few more questions that I missed. I skipped over Nicole Post here. Nat Gas for the win. Been researching your high food prices thesis in the context of a China that can't feed itself. China has poisoned its environment to the point where the CCP admits 80% of groundwater is too contaminated to use for irrigation. So food is going to be the trade of the decade. Be great to hear some trade ideas apart from the fertilizer and land. Also, another expert update on Fed shenanigans would be rad. We talked about the Fed already. Clearly, they're going to raise and the market will fall. Until then, the market will moon when the Fed capitulates and buys everything. I agree. But will that finally kill the debt market? Because at that point, it should be clear that even stuff I can't say on YouTube, that the debt can never be repaid. On that last point, the debt can be repaid, but it will still be defaulted on. You see, what they don't tell you, what the politicians and the central bankers don't talk about, is that they can both default on the debt but pay it back at the same time. And the way they do that is by hyperinflating the currency. They owe $30 trillion. Well, all you have to do is mint the $30 trillion coin and pay off the debt, right? Maybe it's slightly more complicated than that, but they can hyperinflate away the dollar to the point where the $30 trillion isn't worth anything, pay back the nominal amount. Guess what? They haven't defaulted, not officially, even though they basically did. So, the debt can be repaid. It's just they can repay it and default at the same time through hyperinflation. Natural gas for the win. So I've been putting a lot of thought into natural gas, and really the best thought I can come up with for natural gas has been that Cheniere Energy, that ticker LNG, because the Henry Hub prices here in the States are pretty low, and I don't think they're going much higher here in the States. I mean, we are the Saudi Arabia of natural gas here in the U.S., and even with all this LNG we've been sending to Europe this winter, our storage tanks are only about 1% below average because we've had a pretty mild winter here. So I don't think U.S. natural gas is going higher, but Europe's natural gas is so expensive, and Asia has to compete with Europe for our LNG. So again, I see the LNG markets and harvesting that arbitrage. That is the best way to invest natural gas. And again, God forbid, if things in Eastern Europe were to light off, or even if things in the South China Sea were to light off, or the Strait of Hormuz in the Middle East, any of these geopolitical CFs that are going on in the world right now, if any of those come to blows, then the energy markets are just going to explode higher, just absolutely explode higher. And I think Cheniere is really the best play, the best way. I mean, our natural gas supply here in the States is stable. We are not determined on any imports, and that makes us the only hope for the rest of the world if any of these geopolitical situations get worse. And that means Cheniere is perfectly positioned to capitalize on that. And that's why it's one of the few company stocks that I'm willing to buy right now, because with everything I see on the horizon and the prospects of the Fed crashing the market, I mean, I'm in a lot of ETFs and commodity ETFs and a couple of precious metal miners, but Cheniere is really one of the few companies I'm willing to roll the dice on right now, because I think their earnings tailwinds are so powerful right now that even if the Fed crashes the market, they could move higher because their earnings are just going to explode higher. So even if they get some major market, some major multiple contraction going on in the markets, I think this one still goes higher. And again, for food, you know, I've talked a lot about that corn ETF, Nicole. Here's that ETF. There's the flag pattern I drew a few months ago. This one's going higher. Again, this is the fertilizer story. Corn is a more fertilizer-intensive crop, and I'm seeing a lot of articles about South American crop yields are going to be a lot lower this year because of the drought situation they had, and a lot about U.S. farmers planting less corn and more soybeans this year. So I still think corn is the way to play that fertilizer market, which is an offshoot of the natural gas market. And I'm sticking with this one right now. The one bear case for the corn trade that I have noticed is China's orders of U.S. corn has not been what they've been saying they were going to be. So if China slows down their buying of U.S. corn, that could put downward pressure on corn futures. I don't think that would offset the fertilizer situation and the South American harvest, but that's something to keep an eye on. And the other thing, again, Eastern Europe, Ukraine is the fourth largest producer of corn in the world. And if the Russian tanks start rolling across those Ukrainian cornfields, it's going to hurt the corn. It's going to hurt the corn supply. It's going to drive those prices higher. So it's another thing to keep an eye on. I see a lot of super chats popping up, guys. Thank you so much for your generosity and for supporting. Cheeseburger says, Mark Schwartz stump grinding. Just pay him the money, bro. Mark, no rush, brother. No rush. Don't worry. And there's Mark again with the follow-up based on Cheeseburger. All right, that was pretty good. You guys are awesome. And then there's Cheeseburger again, Mark Schwartz stump grinding. I meant the full $50 essay. Devin Brines is on the board. Is crude oil or natural gas a bigger opportunity? Ooh, that's interesting. That's interesting, Devin. Are we playing Would You Rather here, Devin Brines? First of all, Cheeseburger and Mark Schwartz, thank you guys, really, for your support. That is awesome what you guys are doing. Now, Devin Brines, with your question, crude or natural gas? Okay, I'm not prepared for this one, so I'm thinking on the fly here. So, right now, if you eliminate all geopolitical risk, right now, I'd say crude is probably. No, I wouldn't say crude. I would say natural gas right now. And again, when I say natural gas, my method for investing natural gas is the arbitrage between the U.S. and the European prices through a company like Cheniere. Again, not a financial advisor, not financial advice. But yeah, it's that arbitrage, that difference in the prices. I mean, you're talking a difference between $5 in the States and $29 in Europe. I mean, that's just a money printing machine, dude. The LNG's numbers are going to be so good. Now, keep in mind, LNG, 80% of their capacity is booked in long-term supply deals that don't really fluctuate that much. But they do have that 20% of their capacity that they sell on the spot market. And I did a video back in December that showed the course one of these LNG tankers had taken. They had sailed from Louisiana down Central America through the Panama Canal, paid $500,000 or whatever the toll is to cross through the Panama Canal, sailed all the way out past Hawaii on its way to Asia, and then made a U-turn, sailed halfway back across the Pacific, went back through the Panama Canal, paid another $500,000 toll, and then sailed across the Atlantic to get to Europe. That's how good the prices in Europe were. That all of that extra fuel that they burned and extra time and pay for the crew and everything, it was profitable to turn a ship around on the other side of the globe and sail it all the way to Europe from freaking Hawaii. It was still profitable to make that trade. That's how powerful this arbitrage opportunity is with these European prices, what they are. And folks, there's still a state of relative peace in Europe. So that's not even counting the fact that at any minute now, it could get a lot worse. And look, the tanks are still piling up on both sides. So that's a tough call, Devin, but I'm going to say natural gas. I'm going to say natural gas is the bigger opportunity. Now, the one asterisk I'm going to put next to that decision is going to be the Strait of Hormuz. If the Iranians close off the Strait of Hormuz as part of say the conflict in Eastern Europe spreads to the Middle East, and the Middle East is already a pretty hostile place with the Houthi rebels and their attacks against the UAE recently. But let's say Iran chokes off the Strait of Hormuz. That's big. If Iran closes off the Strait of Hormuz, that's a quarter of the world's oil flows through that little narrow passageway. I mean, that's when some of these ridiculous numbers like $300 oil, I think, are possible if it comes to that. Because if you were to eliminate 25% of global oil supply all of a sudden, who knows what markets. I mean, oil swings $5 to $10 on a few 100,000 barrels of OPEC plus, trying to increase their production, which they have not been able to match that increase, by the way. If you're talking about taking like 10, 15 million barrels of oil off the market by closing the Strait of Hormuz, forget it. Those prices are shooting way, way higher. So that is the one instance where oil would outperform the natural gas trade. And again, there's even an asterisk to that because you have to remember a lot of that LNG from Qatar also flows through the Strait of Hormuz. And Qatar is I don't know if they're the largest or the second largest. They're like neck and neck with the U.S. as far as the biggest players in the LNG market. I think the U.S. may have overtaken them recently. But if the Iranians close the Strait of Hormuz, that eliminates Qatari LNG from the natural gas market. So again, Cheniere Energy benefits immensely from that. So Devin, that was a really, really hard question to ask, but thank you very much for the super chat and for supporting the channel. And you guys are still going back and forth. Here's Cheeseburger again with another one. What was the ticker name for the LNG company you're talking about? The company name is Cheniere Energy, and the ticker is LNG. Cheeseburger. Let's bring that one up. Ticker LNG up here, Cheniere Energy. They are based out of Louisiana and Corpus Christi, Texas. They own the Sabine Pass and Corpus Christi liquefaction facilities. They also own a couple of pipelines here in the U.S., but mostly their bread and butter is the LNG markets. Thank you again, Cheeseburger, for supporting the channel, sir. Bradley Collins, new one to the channel. Thank you, sir. Thank you for supporting us with your super chat. Says, check out the whale who made $1 billion option trade on Barrick today. On Barrick, okay. Barrick, I believe, is ticker GOLD, Barrick Gold. And somebody made a $1 billion trade on Barrick today. Bradley, do you know what was the option that he bought it in? What was the date in the strike? So I don't have to go hunting through the option charts. I'd sure like to see where that was. And also, was that a bullish? Was that a bet against or a bet for? Just looking at Barrick right now. Okay, we're doing this one on the fly here, folks. We're doing it live. Let's see. Where would I draw my lines on this chart? I see one here. We're going to put a little bit of we got a support line here that looks pretty good. We also have a downward sloping ceiling of resistance there. And we are certainly approaching the apex. All right, Bradley, I will bite. If I were forced to trade in this company, again, I probably wouldn't do this one right now because, again, we've got a lot of risk in markets, right? But if I had, come on, guys. Yeah, I got to delete these little doodles I made here. Anyways, if I had to guess what this one does, I'd say we bounce around in here. What I would like to see before I made a trade is I would like to see a breakout above this resistance, a back test down, and then a sustained move higher before I traded that one. And I apologize for the terrible artwork. I am not an artiste, folks, but that's what I would like to see. I would like to see a breakout above that channel, a retest down, and then a move higher before I bought into Barrick Gold. That being said, it's a pretty tight channel it's in right now. And, you know, the other thing, again, whenever you're in a pattern like this, folks, you have to keep in mind you also could break down this way. So got to be careful of that one. But, again, look for a move out of the channel, a retest, and then confirmation of the move. That's how I would play that one. Thank you again, Bradley Collins, for your support of the channel. Again, not financial advice, not a financial advisor. He says puts $32 strike for January 2023. $32 puts. Interesting. A $1 billion. Who would make it? Yeah, I'm not even, you got me on that one. A $32 put when the thing's trading at $18. That's interesting. Couldn't comment on that one. That's a little one beyond me. I don't know. Some of you guys who are maybe a little bit better option traders than me, what do you guys think about that one? I'm gonna punt on the puts, the $32 2023 puts. But again, in the medium term, or I guess even in the short term, I'd be watching this channel if I was to trade in Barrick Gold. But again, I think with this market sell-off that's coming, I think precious metals are going to get absolutely clobbered in the early days of this sell-off. Whenever it hits, again, I would say June, but I tend to be early. I think precious metals sells off with everything else, and therefore the miners sell off with them. But then I think when the bottom is finally in, you're going to see gold and silver are going to be the first things to bounce, and they are going to be bouncing hard, especially when the Fed turns the printer on. And then that's it. That's when gold and silver absolutely moon. And that's when I start buying hand over fist, backing up the truck on precious metals and mining stocks. So thank you again, guys, for the support of the channel. Oh my goodness. Mark Schwartz, Stump Grinding. Thank you, sir, very much for that. Was a big one. I appreciate it, brother. I think Cheeseburger just stick it to this, Boomer. I think Cheeseburger just stuck it to this, Boomer. Wow. Okay. Now we're throwing around boomers here. Thank you guys very much. It's really really appreciate the support, everything you guys are doing with your super chats and with your questions, making me think. Really appreciate that, guys. Thank you. All right. Now, there's one other thing I wanted to mention here. This, guys, I talked about this in one of my videos earlier this week. This is OSINT Technical. OSINT stands for Open Source Intel. This guy is like a military analyst, journalist. I don't know who he is, where he gets his information from, but he tends to be pretty accurate. And he's been following the buildup in Eastern Europe very closely. I highly recommend this channel on Twitter. This is one of those things, first thing in the morning when I wake up, I pull up this channel because I want to know if things lit off while I was sleeping. This is where I'll hear about it unless my phone starts buzzing. But I've noticed he's had very, very good information. Even over the summer, I don't know if you remember when those tankers were being seized in the Strait of Hormuz or in the Sea of Oman by the Iranians. He was one of those channels that was picking up that information way ahead of anybody in the press. So I highly recommend this Twitter feed. If you really want to follow the energy trade or the food trade, this is vital information. What's going on in Eastern Europe is a direct input to both of those things. So keep an eye on that one, guys. And again, that is OSINT Technical. And I would be remiss if I did not remind you guys once again about the Ninja Nation Speak Freely event in Dallas-Fort Worth on March 5th. I will be there in attendance along with the Economic Ninja, Joe Brown from Heresy Financial. There's that adorable yet ruggedly handsome someone. We won't mention him. Chris Taylor, also from Financial Fitness. Andy Scheckman, the analyst. David Granados. This is my second event I've done with these guys. Fantastic group of people. They are going to be basically discussing a lot of the things that you can't talk about on YouTube. They'll be able to say it there. Got an absolutely packed schedule, a lot of really good speakers, a lot of good stuff lined up. If you can make it there, there's a link in the description to this video that you can go and reserve your tickets. And there's also a VIP event. There's a dinner the night before where you can actually have a meet and greet and a more informal session there. So that is an option. I can tell you we have limited space at this event, so reserve your place if you can. Do it now. And also prices are going to be going up as they get closer to the event. So I hope to be able to meet some of you guys there and to put some faces to the names of all these folks that I see in the chat. Thank you very much, guys. And, oh, hold on. We got something here. I got something from Mish. He called out one of your, oh, I can't tell which one he was talking about there. All right. So with that, I think we are going to call it. It is about 4:15. We have been going for an hour. Guys, I really appreciate all the super chats, all the support of the channel, all of your questions. Some really tough questions today. You guys made me think today. So I appreciate you guys keeping me on your toes. I owe answers to a couple of folks about the MMRI, Manarino's indicator, and about FEMA, one of the Fed's balance sheet items. So you guys gave me some homework. I got some reading I got to do over the weekend. All right. You guys are keeping me on my toes. Outstanding. I love this group. I love doing this, guys. Thank you so much. I want to keep doing this. And, well, we're going to call it there. Guys, if you're new to the channel, please give me a thumbs up. Subscribe to my channel. I hope to see you guys again. And until next time, live small and dream big.